Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the S&P 500 today. Look at three of my indicators that I look at on a regular basis, and then check in on the three ETFs, which were some of the biggest movers of the week here, and what I cover in the macro section for my members. So let's start off here with the side-by-side view. The industrials were up 15.49 this last week. Big bullish candle. The key to every one of these is what kind of follow through do we get, okay? And we look at the S&P up 170 points, very bullish engulfing. It opened well below the low of the prior week, and it closed above the body of the prior week, and got close. On the NASDAQ 100, it was up 594, but didn't quite get the same as bullish engulfing type candle, but still pretty strong, closing well above the midpoint of the body in here and back above the 10-week moving average. So pretty strong move. We still got a bunch of divergence. I'll take a look at that in a second. The side-by-side with the industrials. Look at the transports. The last 4 weeks are still within the range of the week of December 15th. Okay, this entire range in here has not been broken, either the low or the high. We've just been chopping around, and yeah, we had a big move to the upside here. Again, what kind of follow through do we get? Okay, so that's where we sit with the transports versus the industrials. Let's take a look at the S&P 500. Okay, here's the S&P 500 up 59.32 on Friday. A little doji type candle, not quite what happened over here on the 6th. Yeah, but it's going to be interesting to see where we go from here. And here's the weekly that we just talked about. And the other thing I notice when I compare what's going on or analyze what's going on here in the S&P 500, look how this compares to the equal weight. So the equal weight peaked the high, intraday high, on November 29th, and then literally just like fell off a cliff. And it had the low same day as the big S&P 500 here on December 20th. And then we went into this corrective pattern that really does look like an A, B, C with about a 50% correction here on the equal weight. So we come back, take a look at the regular SPX, and it peaked on December 6th. Here's November 29th. So what is that, 5 days after the equal weight? And then not nearly as dramatic, although we had that 1 day, with the Fed meeting on December 18th. But not nearly as dramatic a waterfall type look as what's happened here in the equal weight. I mean, man. So you look at this and you say, well, this still looks like a corrective pattern, although this first move is fairly deep. So when I look at the Elliott wave picture, I am still looking at this as a corrective move. And I'm looking at, let's go to the weekly, I'm looking at this as an intermediate wave 4. The real question is, what form is this going to take? Look at the divergences that have developed in here, especially since that August low. It's just incredible. And so now I think we're going to get a bigger correction. How long is it going to last? Is it going to be done by the end of April? Is it going to stretch out to the middle of the year? And then we take off again? I do think we have another leg up, but I also think we have a corrective pattern in here that's going to play out. I don't know that it's going to be as big and dramatic as wave 2, but we'll see. Okay, and I know some of you folks really don't like when I say we'll see, but all you can do is lay out a pattern, lay out a possible path forward, and see what the price action does and see how it plays out. Does it confirm your scenario, or does it start to tell you something different? So this is what I'm looking at, and here's how I look at this. I think this is an A, a B, and a C wave. Now this may not quite be complete here for the wave 2 for the ABC. And this B wave is a zigzag in here. So this is kind of interesting. It really, the first leg up definitely got deep, but I think this is a legitimate corrective type action. The real key is what kind of follow through do we get here this coming week? Now, let's take a look at some of the indicators. And I'm going to start off with the McClellan oscillator right here. Okay, so I've got the McClellan oscillator reading at 160 when you round it, plus 160. So this is up into that territory where it's only been there a few times over the last year, year and a half. Let's say the last year. There have been maybe 3 other points or periods where we got slightly higher in terms of the pullback. What I'm watching for is, do we get some kind of little M top that develops? You can get little M tops. Yeah, that's a little M top in here. And then it flips, and then it comes back down. So right now, the market is stretching that rubber band up in here into the overbought territory. And we'll see how long it decides to stay in that type of condition. I want to take a look at the percent of stocks above their 50-day moving average in the S&P 500. And here's where I want to go, right here. So we're down here. We got down into slightly below the 20% level, and now we're back above 30, actually sitting at 40.36. Now you'd look at this and say, well, maybe we've turned around, and it's possible that we're going to get continued movement to the upside. But let me tell you, here's what I'm looking at. I'm looking at the whole picture. I'm saying, is this similar to anything else that I've seen? And especially this little pattern like this. It looks like a wedge pattern to me. Somewhat of a wedge pattern. And so I look back and say, well, have we had anything that's kind of similar to that? I don't need to do that. Let me just scroll back. Okay, so back over here, we had a big W at the end of 23, big W bottom. When we closed above that high, it just took off. Over here, and the Silicon Valley bank crisis, we had a smaller little W type bottom that occurred. When it closed above the middle, it took off. And then we come back over here, we had, somewhat, kind of a W, but it's, definitely a bottoming type of situation, kind of stretched out a little bit longer and then took off. And then when was that? The end of October, November of 22. But what I saw was kind of interesting is look at May, June of 22. We had a similar type wedgie pattern where you had this kind of move here. You came down, you had to, looking like this. You snap back hard for what? 1, 2, 3, 4, 5 days. We chopped around for a few, and then hammered it down lower, and then that was the bottom before the July-August big rally with that August top that happened. So I find that kind of interesting because now we've had 1, 2, 3, 4, 5 days up in a very strong week that happened this last week. And by the way, I was going to mention about that in terms of the ETF sectors. There were 14 of the 16 sectors I look at in my ETF dashboard. There were 14 up and 2 down this week. The prior week, 3 up and 13 down. A complete whiplash, a complete flip in terms of what's going on. Okay, so now in terms of whiplash, let me show you the put to call ratios here on the equity put to call. Again, this is equity only put to call ratios from the CBOE. This last week, I color coded whenever the put to call ratio gets below 45.45. I color coded deep red, almost like blood red. Tuesday, 41 puts for every 100 calls. Then all of a sudden, Thursday, 94 puts for every 100 calls. And you get above 90, I color coded green. Back on Friday, 43 puts for every 100 calls. And, talk about just a little bit schizophrenic in terms of what's going on in here with the market. So, yeah, I think a little bit of whiplash is occurring here. And let's take a look at what happened. Of course, interest rates really, started dropping dramatically. And that affected these macro sectors like right here. Real estate, U.S. real estate, up 4.9%, $4.37. The bank, S&P Bank ETF, KBE, it was up 8%. And the home builders, XHB, up 8.1%. It was the biggest mover of the 16 that I take a look at. So, pretty big snapback, but it's also had pretty strong downdraft in here. So just out of curiosity, I haven't looked at the percentage retracement that we've got right now. Yeah, not quite 50%. So again, what kind of follow through do we get? Now we got a holiday shortened week coming up this week, so we're going to have 4 days of trading, but the following week we're going to get a Fed meeting. So it's going to get interesting. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.